Hey everybody, it's Bruce here with Traveling with Bruce. Welcome to my channel. Today's video is called Why the Shares of Carnival, Norwegian and Royal Caribbean Cruise Lines Could Get Crushed. This is something that no one is talking about in many of the videos I see, especially even from Wall Street. I am noticing in the last week or so, 2 weeks or so, a lot of these brokerage firms are beginning to come out with buy recommendations for cruise line shares. And I'm incredulous. I can't believe it. In the middle of a pandemic that just looks terrible, why on earth would cruise line shares be a buy with regards to the Wall Street brokers? I'm at a loss. In the last couple of days, I have started reading stories and coming across reports that there is trouble in paradise when it comes to the cruise lines, especially with respect to raising cash to survive this entire downturn. In the last, 6-7 months, as you all know, this is September the 1st, 2020, by the way. Back in March, the cruise lines shut down voluntarily, thinking that in 30 or 60 days they would be back up and running because this pandemic will have run its course and all will be well. Well, it didn't happen. The virus has continued to spread. People have passed away, and it's just not stopping. And the boys at the cruise lines did the right thing. They immediately went to their Wall Street bankers, and they approached guys like this guy right here. See the worried face this guy has? That is a bond trader. Now, this guy, he decides for his clients what bonds they should be holding for the best return with the least amount of risk. And the cruise lines used to be an easy bet. These guys would go to the Wall Street boys down in New York here, talk to their exchange contacts, and they would say, look, we want to build a new ship worth $1 billion. We've got a couple $100 million in the treasury. We want to borrow $800 million, build a new ship, and increase our line. And the bankers in Wall Street would say, no problemo. We'll get you $800 million, and we'll get you money at 3.5%, 4.5%. No problem. Well, when the pandemic hit, the cruise lines went back to Wall Street and said, listen, we're not sailing right now with any paying passengers, but we need extra cash to ride out the downturn. We're hoping by spring, summer, it'll all be over. And the boys in Wall Street said, sure, yeah, no problem. We'll raise you money. It'll be a little more expensive, but it'll be 5.5%, 6%, but we'll get you cash. And that's what they did. They raised several billions of dollars and began riding out the downturn. Of course, we all know what happened after that. The downturn stretched on, and the pandemic got worse. The cruise lines shares got rated as junk by bond rating agencies, and the cruise lines decided to cut costs, and they did the right thing. They laid off as many employees as they could. They furloughed a bunch of them. They got their crews repatriated. It took 2-3 months, but by the end of the whole deal, the cash rate, the burn rate that the cruise lines were sitting on, which was about $1.2 billion a month, was now down to $650 million a month. But with the bonds rated as junk, the next series of bonds that they started issuing, they had to start paying interest rates of closer to 10%. But now, in the last couple of weeks, a number of analysts out there, bond analysts, have noticed something that hadn't been talked about before, and that is cruise lines have been raising cash using something called secured notes or senior secured bonds. And these are the kind of bonds where they're saying, you take this bond here, Mr. Pension Fund, and it is guaranteed by the asset value of our company, which is in effect our ships, our cruise ships. And if we ever had problems repaying you, don't worry, you're backed up by our fleet, all of the ships we've got. Well, the cruise lines have a limit. They can only issue secured notes up to 25% of the value of their ships. And they're now at about 24% as we speak. They're at the limit. And the problem with that limit is that limit number is a fluctuating number because cruise ship values are not staying stagnant. They're dropping. Now, we know that Carnival have announced that they're getting rid of 15 ships. We know that Carnival, through Pullmantur, are scrapping 3 ships over there. Other lines, like, for example, Holland America, they're selling some of their ships. So the cruise lines are getting smaller, not larger. And they have fewer ships with which to borrow money against. The other factor that's working against the cruise lines is even their most valuable ships, like this one right here. You're looking at the Harmony of the Seas here. This ship, to replace it, is $1.4 billion. The problem is that the value of this ship on the open market right now isn't $1.4 billion. If someone else wants to buy this cruise ship, this ship wouldn't get anywhere near $1.4 billion because it's sitting in the water without any paying passengers, and it's probably costing between $5 and $10 million a month just to keep it in running order. So all of a sudden, that 25% number of the so-called asset value, these bonds are beginning to breach that value. In effect, there are bondholders out there that bought senior secured bonds 3 years ago that were secured against asset values. Now they're holding bonds that might only have 80% protection, because as each month goes by, the ship's value is dropping and fewer ships are in the fleets. Going forward, if the cruise lines want to raise cash by doing a new bond offering, say a month from now, because they're aware of the fact that they're not going to cruise well into 2021, if not 2022, they're now going to have to try to issue unsecured bonds, unsecured notes. That, in the junk bond business, is the kind of bond that now has to pay an interest rate of between 14 and 20%. Cruise lines may not be able to raise all that much cash at that level, and they may not really want to. They're probably then going to be forced to try to lower the interest rate by offering a sweetener to the bondholder. If you buy bonds, instead of giving you 18% interest, we'll pay you 12% interest, but we'll give you stock in the deal. We'll throw shares into the offering, or we'll offer you a convertible bond that's convertible into common stock at your option at a much lower price than the stock is trading at right now. That would be bad news for all stockholders of the companies. The other option the cruise lines have is that if the secondary bond offering, the so-called junk bond dealers, are telling them 20% minimum, otherwise we can't raise you a dime, the cruise lines will then be forced to just go back to the New York Stock Exchange stock brokerage firms and try to sell shares in the company. The good news about doing that is you don't pay any interest when you sell stock from your treasury. The bad news is you dilute the existing shareholders you've got because you're issuing more paper, and that means every shareholder owns a smaller piece of the company because there are more players in the game. The cruise lines only needed to raise a couple of $1 million, not a big deal. $15 a share for Carnival. You issue 1 million shares, you bring in $15 million. But the problem is Carnival is burning, $600 million a month right now. It's a huge amount of money. They're going to need to issue $1 billion more, $1.5 billion. If they need to raise $1.5 billion with a $15 stock, just think about how many shares they're going to be issuing. It is a huge number of shares. This is going to dilute all of the other shareholders, and it's going to crush the value of these stocks. And that is the danger that the shareholders right now are not being made aware of by the brokerage firms who are giving out buy signals. The brokerage firms are talking about buying the stock now, thinking there won't be any new stock issued because they'll be cruising sooner rather than later, and they'll be making money again, and their shares will go much higher than they are now. What they're not thinking about is the fact that if they have to issue as many shares that are outstanding now, and they dilute everyone by at least 50%, there's no way the shares will ever go back to where they used to be a year ago. They will barely hang on to the prices they have now. And so there's the dilemma that the cruise lines are in as we speak. Thank you for watching this video. Thank you for hanging around to the end. I appreciate it. It's Bruce with Traveling with Bruce, and we'll talk to you next time, everybody. Bye for now.